Hi everyone, welcome back to my YouTube channel. Today's topic will be interview questions related to journal entry for accounts payable, and we will be discussing about all the possible journal entry which can be asked in the interview. So stay tuned and let's dive into it. Today we will be discussing about accounts payable AP entries asked in the interview, and these are very important yet very basic questions which can be asked in the interview for general entry purpose in accounts payable. So I would really appreciate those who are preparing for the accounts payable interview. They must have the knowledge of how the golden rules of accounting works, and it will really help you to understand all the journal entry. Like, I have seen many people working in accounts payable team, and they do not have accounting background, so they can firstly refer the golden rules of accounting, and then they can start with the journal entry. So it will make sense for them after reading the journal, after reading the golden rules. I will also make a video on that, but today we will keep our focus on AP journal entries. So our first journal entry is recording a purchase on credit, and this is a normal scenario when we as a business we make purchase any goods from our vendor. So we do not pay the vendor on that point of time. We purchase on credit, then we have a certain terms of payment. After the terms of payment, we make the payment to the vendor. In the meanwhile, we create liability for that specific amount. So in the journal entry you can see debit relevant expense or assets account, example inventory, supplies or equipment. So whenever we purchase and anything, and it is an expense, so it will be on debit side. And if we purchase any assets, so whenever there is an increase in the assets amount, it always gets debit. So for that golden rule of principle, we have made debit relevant expense and assets account. And then in credit we have to create a liability for the vendor, so that we can make the payment to the vendor in future. So our liability will be created and our liability will be increased. For that reason, AP is credit, because we have a certain liability and that has been increased. So whenever there is an increase in the liability, it will be reflected as credit. And then we have an example. If a company purchased $2,000 worth of inventory on credit, the entry would be, so our inventory will increase, so it will be debit, and also our liability will increase, and whenever our liability increases, so it will be credit. And then we have second journal entry, payment of AP, settlement of liability. This is the situation when we make the payment to the vendor. So when the company pays off its obligation to the supplier, the AP account decreases and the cash account is reduced. So whenever there is a decrease in the accounts payable, it will be debited because of its nature. So debit accounts payable because of decrease in the AP account, reflecting the settlement of the liability. Our cash will be credit because our cash has reduced, so it will reflect on the credit side. We have an example. If the company pays $2,000 to settle the outstanding AP, the entry would be debit accounts payable to cash. So our liability will be decreased, so it will be debit, and our payment and cash will be decreased, so it will be credit. Now we have third entry, purchase, return or allowances. Returning goods or receiving discount. So if the company returns goods to the supplier or receives an allowance or discount on the amount payable, it must adjust the AP balance. This entry reduces both the liability and related expense or assets. So it's a kind of decrease in our liability. So our AP will be debit, decrease the amount owed to the supplier, reduce the original expense or assets recorded. And we have an example. If the company returns 550 worth of inventory to the supplier, the entry would be, so our accounts payable will decrease, so it will be debit, and our inventory will also be decreased, so it will be credit. Now we have fourth, adjustment entry for accrued expense. Expense incurred but not yet billed. So we have few expenses which has already incurred, but we do not have created any bills. It can be utility, and apart from utility there are many expenses. That is the nature of accrual. So sometimes expenses are incurred before an invoice is received from the supplier. In such cases, an accrued expense is recorded. The entry reflects the liability and the expense in the period in which the expense was incurred. Journal entry. Debit relevant expense like utility or interest expense, and record the expense incurred during the period. So we have recorded in debit, and then our credit accounts payable recognize the liability. So we have to make the payment in future. So for that reason we have created our liability and it will be in credit. Now we have also an example. If a company incurs 1000 in utility expense but has not yet received the invoice, the entry would be utilities expense $1000, and also we have a liability which has been created, so it will be credit accounts payable. Whether we have received the bill or not, there is an expense which is going to accrue. So for that reason, for accrual concept, we have accrual concept in accounting. For that reason we have to record it. Now we have fifth entry, early payment discount, taking advantage of payment terms. If the company takes advantage of early payment discount offered by the supplier, the payment is made at a reduced amount and the discount is recorded. The entry reflects an reduced amount paid and the discount recognition. So whenever we get the discount from our vendors, it is a kind of income and it is a kind of discount received. So whenever we receive a discount, it will be credited, and our accounts payable has reduced, so it will be debit, and we have made some payment, so it will be credit. So the journal entry is debit accounts payable full invoice amount, then credit cash or bank payment amount, then we have credit purchase discount. We have an example also. If a company pays off a $1000 invoice with a 2% discount, paying $980, the entry would be, so our accounts payable will be with the full invoice value, but we have only made payment of $980, and $20 we have received a purchase discount. So like this we have to record it, and let me know if you have any queries, any concern, any feedback or suggestion. I will incorporate in my videos and make a good content out of it. So I hope you like this video, and this is going to be accounts payable series third part. First and second has already been uploaded, so you can go and check out those, and this I am going to upload soon. Thank you so much. Thank you.